prior to COVID, you could almost bank the incident rate, we call it, right, which is the number of insureds, let's say, per 100 that seek treatment in a year. It would be around 10 or 11%. But we saw that go to 25% in 2023.
Welcome to the Are We OK podcast, where we talk about public policies in ways that are relevant to you, the person on the street. I am Dr. Botak.
And I'm Mr. Money.
And I know that you guys are waiting expectantly for us to talk about some current issues, including the Trump tariffs, presidency's visit, and a whole host of other timely topics. But we'll save that for later. We'll save that for next week when we have a special guest coming on. In the meantime, for this episode, we have another special guest who is none other than Mark Odell, the CEO of the Life Insurance Association of Malaysia, or LIAM. Welcome to the Are We OK podcast, Mark.
Thank you very much.
So, Mark, you want to sort of like tell us a little bit about yourself? How did you, end up in the insurance business, and what brought you to Malaysia?
Okay. Well, I'll try not to take too long on that because
people would be interested.
It's a long story, right? I've been in the business for 45 years.
Wow. Okay.
Yeah. So I started as an agent. And I was an agent and an agency leader for 12 years.
Familiar territory?
Right. And I had this opportunity of a lifetime to come to Asia in 1994. AIA was looking for young middle managers who could work with their agency distribution. And so for whatever good reason, I fit the bill, and I took the jump and moved 10,000 miles away to Singapore, which I remember was so hot, compared to where I was living outside Washington, D.C. at the time.
In Virginia or Maryland?
In Virginia, okay. Yeah. And I spent a couple years in Singapore, moved to Indonesia, got the chance to run life companies for AIA in Indonesia, moved to Malaysia in 2000. Moved to Singapore in 2004, went to Taiwan with Manulife, running their companies there, moved back to Malaysia in 2013, running a number of countries around Southeast Asia for Manulife, retired in 2018. Then my old colleague and good friend convinced me to become the first CEO of LIAM. CEO of LIAM.
And that was in 2019?
2019. And just to round it out, so my wife's Malaysian of 22 years. And this is home. I'm a permanent resident.
Right.
So Malaysia's home.
Great. Fantastic. Now, maybe let's get on with the topic on insurance.
Yes.
Right. Maybe can we start with this, right? What is the difference between life and non-life insurance policies, and why does the industry make a separation in terms of organizing it into different business units? Because from what I've understand, it is not like life insurance, non-life, everything add together equals to one, but rather it's actually a separate business unit. How does it work that way?
Well, I think because the nature of the business is very different. So life is long-term. General is short-term. Your general contracts are all one-year contracts.
Yep.
They're very short-term. And life covers people, whether it's health or any variation of that. And general covers things. Businesses, equipment, cars, and the like. So it can be very different from a claims perspective, from an underwriting perspective, and from the short-term, long-term duration perspective.
Right. So to put it that way, basically, is whatever that's life and the different, basic individual, everything is different business unit as long as it's a different kind of product, is it?
Yeah, but many countries, including Malaysia, have required separate licenses and separate entities for general insurance versus life versus non-life.
Yes.
Yep.
Yeah, and also maybe just to jump into that a little bit more, you have the insurance operators, and then you have the takaful operators.
Right.
Yeah. So takaful would be for insurance done according to Islamic finance principles, right?
Yep. Yep. And it's growing very, very well, actually, the Takaful arm. I mean, even though it was started probably 30 years ago, it really started to take off 15, within the last 10 or 15 years.
Okay. I guess one of the reasons why we wanted to get Mark to come on the show to talk about insurance to us is because of the recent focus on the increase of the medical insurance, premiums in Malaysia and probably worldwide as well.
Yep.
But maybe before we go into that, why does medical insurance come under the jurisdiction of the life insurance segment of the business, right? Because medical seems to me a little bit shorter term, but you mentioned that life is something that's longer term.
Is long term. Yeah, it's not exclusively under the jurisdiction of life insurance companies.
Okay.
The general insurance companies write medical insurance as well, although they tend to write short-term coverage. They tend to write yearly coverage. They can write lifetime coverage as well, but they tend to write yearly renewable coverage.
Right.
But the life and Takaful industry they have about 90% market share.
Right.
There's only about 10% or so, which is from the general side. And a lot of that is group business.
Okay. Group meaning corporate.
Yeah. Small enterprises, large enterprises. Yeah.
Yeah. So when we talk about LIAM, Life Insurance Association of Malaysia, that would mean that means that the issues to do with medical insurance would come under your purview.
Yeah, we our members write about 70% of the medical insurance in the market in Malaysia.
So, would like to ask you, right? Over the past 10 years, what do you observe as is there any sort of like a trend or growth or anything like that when it comes to medical insurance?
There has been. I mean, even despite the recent problems and actually the rate increases is not recent. Actually, it's been around for quite some time. But the growth of the insurance business has been fairly steady. Even though penetration has been difficult to crack, into that high double-digit number, it's about 40-some% when you count for duplicate policies.
Right.
And so there's still a lot of room for growth. But the medical business has grown quite steadily, and it really started with the introduction of what we refer to colloquially as the cashless card.
Okay.
It started, I remember when I was in AIA 25 years ago. It started back then where, it allowed a patient to be admitted without having to pay a deposit.
Right.
And it became popular. And every year we add about 200,000 to 400,000 new policyholders.
Oh, every year 200,000 to 400,000.
Yep, it's reached 8 million now.
Wow.
8 million individual and about 4 million group policyholders.
Yeah. So actually, you bring up an interesting point. 8 to 9 million individuals, another 4 million, group policies. The unemployment rate in Malaysia is relatively low. We have maybe about 4%, 3 to 4% unemployment rate.
Yep.
Although many people are employed in the informal sector, but the vast majority are in the formal sector. And Malaysian employers, by and large, do give medical insurance coverage to their employees. So, despite that being the case, why do you think that the demand for medical insurance is still growing? Like you said, 200 to 400,000 policies a year.
Well, surprisingly, the group business is growing actually quite slowly.
Oh, okay.
Yeah, I mean, at least for Liam perspective, when I look at the numbers, it's been around 4 million plus minus the last several years.
And that's quite a small percentage of the workforce, right? The formal workforce. You took out the civil servants.
About 16 million, is it the formal workforce? Not,
Yes.
I mean, including
civil servants,
right?
Yes, yeah. But even if, let's say, we take the workforce, at about 12 million, you're talking about maybe just one third. Yeah.
1/3, right.
Yeah.
So there's still, I think, a lot of small businesses don't offer medical insurance. I mean, it's an expensive proposition for many businesses. There is room for growth, but We still see more growth in the individual side than we do on the group side.
Okay. And you attribute this, is it also because Malaysia is getting richer? People have certain demands, or they want certain assurances about their medical care if they get ill, and they don't want to go through. They want to have the option perhaps of being able to access private hospitals,
Yes,
for example.
yes. I mean, it's all those things. I mean, people they want to take control of their medical care or potential medical care. Even if you have group insurance, you may not work for that employer for the rest of your career. Private medical treatment is expensive, and so to access private medical treatment, insurance is still, even with all the increases that we've seen, is still seen as a viable way to do that.
So maybe I can ask Mark. I mean, what advice would you give to young people who are coming into the workforce, who have jobs that offer them health insurance coverage? Would you ask them to, hey, maybe you should, buy health insurance when you're younger, have additional options in case your workplace doesn't cover everything, and then this would be a good practice to have for the rest of your life? Because I was made to understand that if, let's say, you start your health insurance or medical insurance policy, let's say when you're a bit older, when you're over 40, when you're over 50, the premiums actually increase quite significantly.
Well, that's an interesting topic, actually, because your premiums for individual medical insurance are going to go up as you get older, regardless of when you buy it. So you can buy it at 25. By the time you're 35, it's still going to be higher because of age change. It's all age rated, right? But there's a growing trend that many companies are coming out with plans that have very high deductibles that are meant to sort of complement the group insurance plan.
Yep.
And that allow the benefits to sort of step up when you retire.
Yeah.
And so that is something that could be attractive to a significant number of the workforce.
Yeah. So just to clarify, in case the audience doesn't know what deductibles are, basically it's a money that you have to come out of your own pocket before you can start claiming.
Yes.
So the higher the high deductibles would be like to try to prevent people from maybe spuriously, claiming for insurance. It's something like your NCB for your car, no claim bonus, something like that.
Yeah, you got a co-payment kind of
Yeah, so typically for this type of plan, you might have a $20,000 deductible for your, because your group plan will cover,
That's right.
the first part of the coverage, and then you're worried about the excess.
Yeah, I used to have that plan last time when I was working also.
Okay.
Yeah.
Did you also sell that plan to others?
Yeah, usually if the person is limited in budget, I will suggest them to do that. Or either the person is reaching some sort of nearing retirement but have no insurance policy. I used to recommend them to take a 10K because 10K deductible. Because why? Let's say you're about 45 years old, maybe 10,000 ringgit.
You still can afford it.
You still can afford it, right? With the kind of financial ability. But your premium, it's significantly reduced because first 10,000. So sometimes I see some of my my ex-clients, right? They pay probably about, say, less than 200 ringgit, even though at the age of 50 plus.
Yeah.
This would be 200 ringgit a month.
A month, but there's a 10,000 deductible, which means anything less than 10K, you pay yourself.
Okay.
I mean, that sort of plays into the actual, the true reason for having insurance,
That's right.
Is to cover things that you can't afford to pay for yourself.
For catastrophic situations.
That's right.
A lot of criticism has been laid on the industry for selling very rich plans that actually may be more in some ways than people actually need.
That's right.
And there's also people are used to, their thinking is that if I pay for insurance, why do I need to pay for a deductible? It should pay for everything, right? It is a little bit controversial.
Yep.
It is a bit
but I think
controversial.
if you use the auto vehicle example to say that, if you are eligible for a no claim bonus if you don't if you don't claim for a longer period of time. I think people would be able to understand that you are trying to dissuade people from maybe some a bit more spurious kind of claims of a few hundred ringgit, that kind of a thing. But maybe before we stop at this segment, there's also been some discussions this year about the fact that rather than having a deductible capped at a certain amount, Bank Negara seem to open up the doors for another option to come in, which is a co-payment of a certain percentage.
Yes.
So
Co-insurance, we call it.
yes. What is the sort of like rationale for having that kind of option?
It's actually co-insurance is actually more effective in controlling consumer behavior. So it's because the deductible. Let's say I have a $500 deductible. Once I pay the $500 deductible, everything else is covered.
Sure.
So I pay the $500 no matter what. But if I pay, let's say, 10% of the first 10,000, the theory goes, right? I may take more of an interest in where I go, how much is the bill, etc., because I'm on the hook for 10% of that bill.
Yeah.
So it's just another form of copay.
That's right.
It tries to incent the consumer to take more interest in the cost.
Yeah.
On that note, I mean, some people have come, and again, this is, putting on my hat as a former member of parliament. I agree with you that it probably gives more incentives for the individual consumer to be more careful about the costs of whatever that they are seeking treatment for. But in situations where there are maybe catastrophic events, very serious cancer or operations, then suddenly my bill goes up to a few $100,000, and then if I have to pay 10 or 20% of that, then it becomes very, very financially straining on myself.
Well, absolutely, and that's why it's almost always capped at a very reasonable level. So as I mentioned, 10,000 is a common number.
Yep.
So 5% of the first 10,000 or 10% of the first 10,000 and then 100% after that.
Yeah.
So your exposure is capped.
Okay.
You won't find plans in the marketplace that you'll pay 10% of
everything
indefinitely. No,
okay.
you won't find. You won't find.
Yeah. Thanks for clarifying that.
Yeah.
So what happens if, let's say, this person gets admitted and it's a serious accident or something like that, and that person or that person's family is not able to come up with a co-payment of even, let's say, 1,000 or 2,000 ringgit.
Right. There are provisions in the regulation that require an insurer to waive the co-payment, whether it be deductible or co-insurance, under emergency situations. And so it also addresses serious illnesses, if I'm correct. And so there are situations where it tries to address that very situation.
And these regulations would be under the purview of the Central Bank of Malaysia, Bank Negara.
Yes, it's a regulation that all insurance companies must follow.
Sure, yeah. So thanks for clarifying that.
Yeah.
With that, I'd like to take a short break and then come back for the second segment of our special interview with Mark Odell, the CEO of the Life Insurance Association of Malaysia. Be right back. Welcome back to the Are We OK podcast with our special guest, the CEO of the Life Insurance Association of Malaysia, Mark Odell, who is originally from Ithaca, New York.
Yep.
We were having a conversation before this. That's where, it's a very pretty place. Cornell University and Ivy League University is there as well. And now Mark is Malaysia. In Malaysia, Malaysia is his home. His wife and his kids are
permanent resident.
Malaysians. Permanent resident, yes. So you were in Malaysia during the COVID pandemic.
Yes.
And I think this was a very interesting period of time because, of course, a lot of people couldn't seek healthcare treatment, the normal healthcare treatment. And then, of course, there were people that were affected by COVID as well. When did you start to see the escalation in the number and also cost of claims, via medical insurance after COVID?
Yeah. So as you said, during COVID, people avoided going to the hospital unless they needed to, right?
Yeah.
So we saw a bit of a respite in claims, even though, believe it or not, even though 2020 there was a slight drop in the amount of claims, it was like 2%, but even in 2021 it went up a bit, but it really went up gangbusters in 22, 23, 24 started to temper. which we're a little bit encouraged by.
What kind of percentages are we talking about?
Well,
let's say in 2022.
Okay, I'll give you a couple of different metrics, right? So in 2021, claims went up 33%. In 2022, claims went up 26%. In 2023, claims went up 14%. It went up quite sharply, but it was all driven by volume.
Okay, so this is volume of claims, not necessarily value of claims.
Right.
Yeah.
The value of claims went up modestly, about 7% a year.
Okay.
Which we saw in the pre-COVID times as well. We did a study, a 5-year study of 4 million claims. It was about 7 to 8%.
And this is total claims or individual claims by value that went up 7%?
Individual claims by value.
Okay.
Yeah.
Okay.
So per incident.
Yep.
Right. So prior to COVID, you could almost bank the incident rate, we call it, right, which is the number of insureds, let's say per 100 that seek treatment in a year. It would be around 10 or 11%. But we saw that go to 25% in 2023.
Oh,
So I mean, it was just an incredible spike, which put a lot of pressure on insurers. Partly also because during COVID, we were deferring premium increases.
Yep.
So some of the premium increases that were enacted in 23 and 24 were a catch up all the way back to 2019 and 2020, because there was a moratorium on increases during COVID.
Yep. So, what do you attribute to this increase in claims? Is it because people were seeking medical treatment for cases associated with COVID, or they just had deferred, operations and whatnot that they pushed to after COVID?
Yeah. By and large, when I talk to medical professionals, it's really the putting off of elective procedures.
Yeah. Things that are not so serious, they can wait.
Let's say a knee replacement or
Your
some
hip
other
replacement.
some other non-life-threatening condition. It may be annoying and troubling and medically necessary to address, but they can put it off, right? So we saw that as a major contributor to the volume. But it is interesting. I don't know. There hasn't been any real studies, but I keep hearing from medical professionals that people seem sicker today than they were pre-COVID. I've heard, that people come in with pneumonia, they're in worse condition than the normal patient. I don't know what to attribute to that to. I don't know if it's real or if it's or not. But I do hear that a lot, actually.
Well, I mean, have you gotten COVID before?
no.
No. Oh, you haven't.
Oh,
Yeah.
I have had it twice.
I've had it 3 times.
Yeah.
Oh, really? My wife had 3 times. I never tested positive before. So
So do you see like a deterioration in the health of your wife because she's got 3 times? Probably not, right?
not so.
Okay.
Yeah, not so among my friends.
I don't know. Yeah.
But I had a couple of friends. After that, they got sick, quite badly sick, right? And they kind of put the blame on COVID or either the vaccine, right?
Yeah,
But
yeah.
I think it's part of the way of dealing with grievance, right? Because it's
okay.
a quite bad kind of illness.
Got to blame somebody or someone.
Yeah. So I wouldn't really know until we see a large sample size.
Exactly. Actually, I say I hear stories, but I don't know whether what's really behind it.
Yeah, so I
don't know.
However, I do think that recently there are a couple of studies that came out that start to kind of show hints that certain people who actually went through the vaccination or something like that, kind of certain issues.
Okay.
Yeah, here and there, but.
But like you said, we have to wait until...
It needs a lot of studies.
Yeah, and you need some sort of a
longitudinal
longitudinal study to actually really confirm it, right?
Yeah.
And by then it's irrelevant, I guess.
Yeah.
True.
Well, I think the issue here is that, how... I'm assuming that most of the adult population in Malaysia and even some children was vaccinated.
Yeah.
Right. Yeah. You had different
Yeah.
vaccines, so
Yeah.
you probably couldn't get that different of
Yeah. So I guess what you're trying to refer to is it's a little bit of the question is that is it really getting sicker? Or is it rather some sort of a moral hazard, right, in the insurance term where is it
you feel that you're more sick and then you go out and claim.
in short, bad actors who are not following the rules or trying to bypass it, right? So there's always going to be this debate, right? Yeah. So, but what are your thoughts about it, Mark? Then,
Well, I don't know. I mean, personally, I don't feel any less well than I did prior to COVID. Except for being a little bit older.
Yeah, we all feel that. We all feel that. Yes.
All right, but again, we are small sample size.
Yeah.
But I guess
but this is the feedback I get are from medical professionals who are treating people.
That's right. That's right.
And they're saying they're seeing people who are sicker, which is troubling.
I'm so sorry. You did point out one thing earlier, right? When we talk about the increase in claim values, was not in the form of a value per treatment, but rather in frequency.
Yes.
So
volume. Yes.
In volume, right? So even if I say that, say patient A is getting sicker, by statistically, it did not increase. It did tilt the.
There was an increase in the cost of per patient per admission.
Yeah.
But the bigger driver was the volume.
Yeah. So the bigger driver was the volume. So then the question is that, are there more people getting?
Or let me
right?
put this another way around. It could have been driven. The volume could have been driven because of the fact that many people didn't go to see the doctor after COVID. And you did say that there was a sort of like a tailing down in terms of the rate of increase. To I think you mentioned 14%.
14%. Yes.
So if that's the case, wouldn't there be a reason to say that the total value of claims will also come to a place where it's more controllable, more moderate, not as high.
That's my hope. I tell you, yeah. I put my head down on my pillow every night, hoping that that's the case. Sure. We'll see. I'm very anxious to see what Q1 is. I don't have the numbers yet. Right. To see whether the trend is continuing, but it's been a little encouraging to see that it's coming down.
And this is not just, I think, something that affects Malaysia alone, right? I'm sure that many other countries have seen this similar trend as well.
The whole world, actually. Okay. There may be some exceptions, but generally, global medical inflation used to be pre-COVID around 6%, and now last few years it was 10%. Asia is about 11%. And Malaysia, our studies of claims from 21, 22, and 23 show 16.1% increase in not
value
claims, but the claims per person.
Okay. Yep. Okay. The value of the claims.
The value of the claim.
So it was good that Bank Negara 2024 annual report that was just released last month actually had some of these calculations for MHIT or medical and health insurance and also takaful. The value of the claims increased by a total of 73% from 2021 to 2023. Whereas your premiums, the insurance premiums for the medical insurance, only increased 21%. Right. So you have the value increased a lot, but you could only increase premiums by a smaller amount, right? So what kind of effect did this have on the business?
It has a big effect. What we look at is the loss ratios and what we call a combined ratio, because the combined ratio, loss ratio is the amount of every dollar that goes for claims, right? And the combined ratio takes into account your expense, your distribution costs, your profit, all the other costs involved with your premium. We've seen in 22 and 23, we've seen claims ratios approach 100%.
Wow.
That means on top of that, when you put your other expenses on top of that, you're over 100%.
Wow.
And so there are no shortage of companies that were losing money on their medical books of business.
So the claims ratio, going to about 100%, it's for the industry as a whole?
Yeah.
Okay.
I'm talking about Liam now. Which
Okay,
is,
yep, correct. Yeah. Within the individual members, would there be great differences? And some
there would be some differences. There would be some that would be better off, and some that would be much worse.
Okay.
Yep.
Okay.
Yep.
Yeah.
No, having said that, talking about claim value and all, right? I just want to refer to some of those popular articles that are around, right? They always say that when a patient goes to a hospital with an insurance and without an insurance, you get two different set of prices, right? Particularly one that's quite popular was about a dengue case as well, right?
Yep.
Yeah. So, what is happening there? And is there any way that insurance company can kind of minimize the happening of that? Because this sounds like
you're taking advantage,
right?
Yeah. I mean, I have heard the same stories and other examples as well. There may be actors that have that charge as much as they can for an insured patient versus a non-insured patient, but I think most of the time, what happens is a non-insured patient will negotiate or will be offered a discount. Not that there's two sets of pricing,
right?
But the uninsured patient, and I've heard this from doctors as well. So I have an uninsured patient. I will take due care with what I order for that patient because I know that patient is going to be paying for it out of his or her own pocket. But if it's an insured patient, then I'm not as concerned about that. I will order what I need to, and maybe even then some, because I know that the insurance company is going to pay for it.
Okay. Is that something that is seen as positive or negative on the part of Liam, on the part of your members?
Well, I mean, it. You have to conclude that if the hospital can afford to give a discount to a cash-paying patient, then they could afford to charge less to an insured patient as well.
Yeah.
I mean, that's what my thinking would be.
Sure.
Yeah.
And then has that kind of messaging been communicated to some of the healthcare providers that are also your customers, so to speak?
Yeah, it has, and generally, of course, they will. They will not affirm that there are two sets of pricing.
But I've heard that some hospitals will say that, look, we are not obligated to give the discount for those who are uninsured.
Right.
But we do this because it's a social service, so to speak.
Yeah.
No. I think that's true. I mean, I think that they often give a discount for a cash-paying patient. Whereas there's no need to give a discount in their mind, right, to an insured patient.
Yeah, I think we'll come back to the whole cost control part later on, which, I'm sure you guys have also, voiced out your concerns with, the different medical groups that are out there. But, maybe, we can shift the focus to one solution or one part of the solution that has been raised by different people, including the current health minister, Dr. Zul, the former health minister, Khairi Jamaluddin, which is this whole idea of this diagnostic-related groups or DRGs.
Right.
Can you explain that to us, and how can this possibly help reduce medical costs and also treatment?
Yeah. No, I'm glad you asked that. It's an important issue, and Liam supports the introduction of DRGs, as we call it for short. So right now, the private hospitals operate on a fee-for-service basis. So whatever you consume, you're charged for, every item. I went into the hospital for one night last year for a very small procedure, and I had 95 line items on my one-night stay.
Your tissue, your linen,
everything.
Yeah.
Right, everything. And so it lends itself to the hospital wanting to provide as much service as possible, right, so that they can bill for as much items as possible. So when it comes to DRG, it's reversed, actually. So DRG is really a complex package pricing. First you have to think about, every patient may be different. Every hospital has different cost base, different considerations. Patients have comorbidities and complexities. And so these systems have been developed over years to cater for as many variables as possible. There's a couple of thousand diagnostic-related groups. But what it means simply that if you're deemed to be in this diagnostic-related group, there is a one payment that will be made for your for your admission, and it's up to the hospital to make good on or make do right with that amount of money. The more efficient they can be, the more profit they can make, and that turns the whole equation on its head.
Yeah, so maybe just to explain to somebody who's not so familiar with some of these processes. Let's say I go into a hospital, a private hospital, and I'm diagnosed with having appendicitis.
Right.
Right. So taking out the appendix would be a procedure that will be under a particular DRG.
Right.
Right. And then you would say, for this particular procedure, this is the amount that we're willing to pay in
Right.
terms of medical claims.
Right.
The rest of it, whether you want to serve very good food, whether you want to, the number of tests that you want to prescribe before or after, all these things is up to you. But this is how much we're going to pay for appendicitis, something like that.
No, that's right. And of course the that amount takes into account whether you have comorbidities or any complexities that arise.
Your age, maybe.
All of those things. That's why there's so many variations.
Okay.
Yeah, but you're right. You're basically right.
Yeah. I think one question about this is, what do you think are some of those obstacles in actually rolling out this particular policy? Because it seems rather complex, and
It is
there needs a
complex.
lot of transparency as well, right?
Yeah.
Which the current infrastructure doesn't look like a sound support for it.
Yeah, maybe I can just add on as well. I think what I've seen, from a policy perspective, is the government regulates the amount that a private hospital can charge for certain operations, right? That's in the Ministry of Health's regulations.
Right.
But what the government doesn't do is to regulate the charges that a hospital can charge on the ancillaries, right? Your services provided, the rooms, the food that's provided, and other bells and whistles, so to speak. So that is one area, like you said, 95 line items. This is where many of the private hospitals want to use this way to, increase their profits.
Right.
And then I think the doctors also are fine with this because that's how they also supplement their income.
Yep.
So, how is moving to DRGs? How does it address that? And will there be pushback coming from the hospitals and the doctors?
There will be pushback, certainly, because it means that their revenue could be affected, right? And so obviously there'll be pushback, right? And then they'll have to actually get skilled at actually controlling costs, right? And this is probably our biggest feedback is we don't see enough cost containment effort from hospitals.
Yeah.
But it is complex, and it takes. I just read a paper by one of the consulting groups of some European countries that introduced DRGs, and there's so many examples of variations of DRGs, around the world, and it generally can take several years actually to get it up and going, and nobody ever covers 100%. Sure. There's always outliers that actually come into play. That it just doesn't fit right into the DRG.
Yeah, I can imagine a situation, Peter and Mark, whereby the customer, the patient, goes in and then says, "Oh, I thought I had a health insurance policy coverage, medical insurance. Why are you not giving me 3 meals a day? Why are you not, giving me, additional toothbrushes and stuff like that? And maybe for some, they would prefer to go to a nicer hospital versus maybe not so state of the art private hospital. How do you take into account those kinds of demands and differences under the DRGs?
Yeah. Well, I mean, the DRG does, well, first of all, there's a minimum level of service that's expected, right?
Okay.
Nobody's going to not get 3 meals a day.
Okay, that's good to know.
But,
Buy your own bread.
yeah.
But the amount of chicken that they put inside, and things
maybe.
like that, yeah.
I don't know about that. I don't know about that. Every hospital, will have different adjustments, based on their own circumstance, for that DRG. They all have different cost bases. They have different capabilities, right? Some may be rural, some may be urban, and so the DRG.
Some may be in KL, some may be in a small town.
That's right. They may be in East Malaysia, and so the DRG would be different. And in the end, they're also all negotiated, between the provider and the payer. So there is a lot of work to do. There's really, excuse me, there's really an implementation path that has to be followed, right, in order to get from A to Z to where you really have a significant number of your procedures on DRG system.
And who would be the relevant, government agency or ministry that would be discussing the DRG? Details. Would it be the Ministry of Health or would it be Bank Negara?
It would be the Ministry of Health.
Okay.
Yes, it absolutely would be the Ministry of Health.
Yeah.
Yeah.
Okay.
Yep.
Yeah. So why don't we take a break and then we come back? We can come back and talk about some of the interesting initiatives that are being proposed by Bank Negara on the medical insurance side. Be right back after this.
Hi, welcome back to the third segment of this episode with our special guest, Mark Liam, CEO. Mark, there's this thing, right, that recently I read from Bank Negara, that they are actually suggesting, or they want, right, relevant stakeholder, including all these MHIT players, to transform their offering with development of what they call a base MHIT product. So the whole point is that they want this development of base product to develop what they call a scalable solution that can ensure sustainable premium over long term through larger risk pooling. Now, with all that long sentences, maybe you can elaborate for us, what is this product actually? And can this actually coexist with the existing MHIT products? Because it does sound like it's a competition in itself already, and a lot more other things, such as can it really manage costs and stuff like that?
Yeah. So a basic product, first of all, is just that. It's a basic product. So the amount of benefits that you would expect would be less than what you might find in a typical product out there today, right? It's one of the things, for instance, we had talked in the last segment about DRG. One of the things that we want to introduce in the base product is diagnostic-related group pricing, right? So as a way to try to manage claims. And the basic plan, there's a couple of elements there. First of all, it's voluntary. Right. So, and it's really, when people talk about sustainability, I think about affordability. It's really trying to create a plan where those who cannot afford the more comprehensive plans can still have an option of having coverage and access, right? And so, it's meant to be scalable in a way that you can add additional coverages on top of the basic plan. So you could get to where you are today, more or less, with the plan you have today by adding different coverages on top of the basic plan. But you always would have an option to step down to the basic plan if you need to. And that's the idea.
Right.
And we're hoping that we can convince EPF that the value of the product is worth an EPF member to be able to use some of their EPF funds to pay for some of that premium.
So just let me clarify. For this basic product, is it trying to target maybe the B40 community in Malaysia that generally doesn't want to buy health insurance because they have all these other financial obligations, and by getting more of them sort of like contributing to this, you would be able to maybe, spread the cost out a little bit more, especially if, let's say, you have a bigger base of people subscribing to this basic product. You'll have a better risk pooling and more manageable costs for that segment of the population.
Well, it's not exclusively, it doesn't exclude the B40, but it's not meant to target the B40.
Okay.
It really is meant to become an integral part of every plan that might be out there. Ideally, if we can make it work, where you and I might also have an element in our plan that is the basic plan,
Right.
It really would be suitable for the entire population. Ideally, what we want to get is higher penetration. So we talked earlier about some 12 million or so people have between group and individual. That's still only about 35% of the population.
Right.
When you look at countries like Singapore, they have 95% of the population insured. When you look at the U.S., as challenging as that environment might be, they have somewhere around 90% of the population insured either through the government-sponsored Medicare or
Medicare, Medicaid,
or through other plans.
Yeah. Okay. I think just a little bit more clarity in the sense that would this basic product, be underwritten by the insurance companies?
Yes. Yes.
Yeah.
So it would be that and nothing has been really decided yet. Sure. I mean, we're still in the early days, and we'll likely work with experts that have experience around the region as well. We're looking at the Singapore model, looking at the Hong Kong model, looking at the Australian model. It's likely going to be where the government, whether it be MOH, most likely, maybe together with Bank Negara, sets the parameters as to what is included in the basic plan. Then it is underwritten by a private insurer.
Right.
Yep. And serviced and everything by a private insurer.
Right.
And would the government be expected to put in any subsidies for this, or is it?
There's no talk about that at this point in time. No talk about that at this point in time.
Wouldn't that look kind of like a investment-linked plan, but a lot more reduced in that sense, where you can start with a very, very basic
first
amount?
of all, it will be standalone. It wouldn't be
Right.
it wouldn't be a rider on typically what you find on investment link is what they call unit deducting riders, right? It would be standalone. It would be basically a more scaled back version of what you find now.
Yeah. So it's kind of like the concept is
A
kind of
budget plan.
like a basic one, but it's not investment link, and you can just top up, reduce
Yeah.
with riders,
Yes.
and customize it around so they can kind of be much more sustainable over long term as well. You can reduce and increase as wish, right?
Yeah, that's the
plan.
vision that I have. Like I said, we're still in early days, and there's still a lot of discussion happening.
Yeah. So, Mark, you mentioned the Singapore as well as the Hong Kong model.
Yeah.
From my understanding, in the Singapore model, you have MediSave and MediShield.
Right.
So MediSave is where you actually take a portion of your, in Singapore is the, a CPF, the Central Provident Fund, and part of that goes into MediSave, which again can be used for paying off some of your healthcare costs, and then part of it goes into MediShield, which is the medical insurance portion, right? And the Singapore model is, as far as I know, is mandatory for all CPF contributors.
The basic plan is mandatory.
Yep.
MediShield Life, they call it.
Yep.
It's mandatory.
Yep. So is there a reason why, Bank Negara and MOH prefers a voluntary model, which is what I understand Hong Kong uses? Because is it easier to sort of like sell to the public, so to speak?
I think so. I think that's a big one. I think there's a financing challenge, right? And it's not just about paying the premium. You look at the public sector also has a financing challenge, right? So to impose premiums, let's say on the B40, there undoubtedly have to be government subsidies, right? And that whole thing has to be thought out, whether the whole public sector changes, the way it actually operates or not, right? Whether there is a national health insurance scheme and then the public sector actually charges for part of its services that is then covered by the national health insurance scheme. I mean, that's kind of the way it works in Singapore, right? The MediShield Life covers only for a government hospital.
Yep.
Right? And the government hospital charges, although it may be subsidized, but they do charge. So I think there's a lot of groundwork that would have to be laid before we could actually talk about a mandatory plan.
Yeah, that would be require big structural changes.
Big structural changes.
Yeah, which perhaps the government is not ready to tackle now. Yeah, I since we are talking about Hong Kong just now.
Yeah.
Hong Kong's plan is purely voluntary?
Yes.
Okay.
Yes. Hong Kong plan is voluntary. The rules in terms of coverage is set by the government. And it works pretty much as I described it. What we're looking at is insurance companies underwrite it, service it, pay the claims. They provide the basic coverage, and they provide any top-up riders that is suitable or deemed desirable by the insured.
Right.
Yeah, and in Hong Kong, has that model been relatively successful in terms of?
Well, the take-up, as I understand, has been quite good. I mean, with the top-ups that you can get, I mean, you can basically get to any level of coverage that you desire, right? You get a tax break, you get a tax deduction on the premium that you pay, or maybe it's a fixed amount, but it's a certain amount, better than nothing, right? Right. But I understand that the take-up's been pretty good.
Right.
And do you see this as a process of perhaps getting more Malaysians used to the idea of paying for health insurance, and maybe that further down the road can lead to more of some of the structural changes that you talk about in terms of healthcare in terms of how healthcare is being provided by both the public as well as the private sector.
Yeah. No, I do see it as a precursor to a national health insurance scheme.
Okay.
The industry, the life insurance industry, is in favor of a national health insurance scheme. Because we think that if we can get generally, by and large, the entire population insured, there's a lot of things that we can do. You can do away with underwriting. You can do away with pre-existing conditions. You can go to what we call community rating. So one rate for everybody. There's so many things you can do if you can get the entire population insured.
So I just want to explain this to our audience. I think what you talked about in terms of having the entire population enrolled in this national health insurance scheme, if the government decides to have one, is this issue of risk pooling. Right. And that reduces the overall cost of and
the anti-selection.
Yes, and adverse selection. You want to explain that a little bit more to those who may not be so familiar with these kinds of terms?
So the reason, and I've had this conversation before with special interest groups who are concerned about why can't you cover disabled people, or why can't you cover people who have this sickness or that sickness, et cetera, et cetera. And I have to explain is that the current situation in Malaysia is that insurance is voluntary, and so those who decide to buy insurance have to be underwritten, and that's to protect the risk pool, actually. If we open the risk pool to everybody, then everybody's premium will be going up.
That's right.
And it may not be evenly spread also. I mean, there may be certain players that are disadvantaged.
Meaning those who perhaps are healthier, require less, medical attention, they would have to sort of like, suffer the brunt of some of these adverse
of allowing
selections.
people in who are less healthy.
Okay.
or severely less healthy.
Sure.
I mean, there are less healthy people that are in the pool. Some of them may even pay a bit more premium, but there are general exclusions, for people who are seriously unhealthy.
What do you think would be some of the pushback in terms of making national health insurance contribution mandatory? in the case of Malaysia?
Well, again, I think it's the dynamics between what the public sector does in terms of providing for care, how they're financed, right? I mean, the co-payments, I think it's still at 1 ringgit.
Yeah, it's very, very low. Yeah, for
Right,
public
right,
hospitals.
right,
yeah.
right.
And even the medicines are also very, very
Yeah.
price very low.
They'd have to change completely, the way that they operate. And the monies that the government spends on operating may have to go to pay for some subsidies for the underprivileged, right, who can't afford to have private health insurance. Yep. And the private hospitals, this is just my opinion, right, thinking about the issue. The the public hospitals will have to charge more for their services, which will be recovered through the National Health Insurance Scheme.
Sure. Yep.
So they have to shift the whole way that the financing with the public sector works. The private sector would be a little bit less complicated, right, because they're already used to providing services and collecting from insurance.
Yeah.
Yep.
Maybe I just want to editorialize here and share my perspective as a former policymaker. There were attempts in the past to set up a national health insurance scheme. It was called One Healthcare or something like that. And of course, because the whole thing was politicized, that there were people saying that this would only benefit people who are close to the corridors of power, who can benefit from providing these insurance policies, and then the whole thing was shut down. But I think I know for a fact that before the 2018 elections, there was actually a white paper that was commissioned by the Ministry of Health, and this was under the then minister, Dr. Subramaniam from the MIC, who's also a medical doctor. And they went through many experts, including people from the T.H. Chan School of Health Policy in Harvard, to come down and help us write that policy.
Right.
Unfortunately, after 2018, for different reasons, that whole plan was not implemented. But one of the recommendations in that particular plan was to introduce this voluntary health insurance scheme. At the basic level, as a precursor to bringing in more coverage as and when the public gains more trust, and I think the system also accepts this as a credible option.
Yeah. So the challenge is really coming up with something that is comprehensive enough, but still affordable.
Sure. Yeah.
And that's really going to be our challenge.
Yeah, and that's an ongoing discussion.
Yes.
Between Bank Negara, between MOH, between you guys as stakeholders,
and the professional consultants that we're trying to engage with.
Yes, and also the healthcare providers.
Yes.
And we mustn't forget about them, although you may not be in a position to speak so much.
And the consumers.
Yes, and the consumers.
Consumers.
Yeah. So last question from me before I pass it back to Peter. We talked a lot about Singapore, and we talked about MediShield Life, which you mentioned, which is the subsidized version of national health insurance policy. This year it was announced that premiums for MediShield Life would increase by as much as 35% for certain groups, phased out over a period of 3 years from 2025 to 2028. Are there any lessons which we can learn here in Malaysia from Singapore's experience in terms of trying to adjust the premium increases for this MediShield Life, which is a basic package? Yeah,
I think there would be. As we mentioned earlier, the first lesson that I look at is that they make it mandatory, and they have generally the entire local population covered, right? Which gives them a lot of flexibility. And secondly, I think the consumer has a hard time when you look at premium increase announcements of 40% or 50%. Those are almost always the multi-year increases. They may not have increased it for 2, 3, or 4 years,
and it all comes together.
But it doesn't help, right? It's not well understood, nor does that fact really make it any easier, right? But to spread out, I think we've all learned a lesson that probably more frequent but less increases maybe more acceptable, to the consumer.
Yeah, I think small adjustments sometimes is much more bearable.
Yeah.
Because it gives people time to actually get used to it. It's
Yeah.
much better than like your premium from 200 and suddenly next year
Yeah.
375, right?
Yeah. Yeah.
Yeah, that's like,
Yeah.
whoa.
Yeah,
a little
almost
bit too
double.
much.
Yeah.
Right? But if
Yeah.
you say
Yep. Yep.
200, then 215, people won't complain so much.
Yep.
Yeah.
Yep.
And for clarity, Bank Negara did issue a statement to say that the increases, I think, for the next 3 years are capped at a maximum of 10%.
Yep.
And for some insurance companies who have increased beyond 10% and have charged consumers for this, they would have to make some adjustments and probably maybe give some rebates back to the customers
Yes.
and things like that.
Yes. Yes.
Is that
Maybe I can share
Sure.
with you a little bit about the interim measures, right? So when it comes to the premium, so it covers 24, 25, and 26. You're right. They cap the. There are three categories. Those that raise premiums up to 20% have to spread it out over 3 years. Those that raise premiums between 30 and 50% have to spread it out over 5 years. Those that raise premium more than 50% have to get special approval from Bank Negara.
Okay.
Okay, and so they have to show good reason why they have to do that, right? But this is only a temporary reprieve, right? Because in no time, time will go by, and we're going to be faced with the fact that what do we do now, right? So that's why there's a big sense of urgency to do something and to come up with some measures that improve the situation.
Yeah.
The last point is for 2024. So the interim measures only came into effect December. But insurers have set up hotlines. They have been compelled by regulation to reach out to policyholders who have maybe already paid that rate adjustment, and they're eligible to get either a rebate or some credit toward their future premium, and so it affects those target audience also.
Right. Yeah, I guess what happened is that for most of these people, this whole interim thing is really just interim, right? Because after 3 years, then
it is.
You still got to face the music. So some sort of solution got to happen within this 3 to 5 years.
Yep.
Right. Now, having said that, right, if let's say all these medical claims keep going up, and then with insurance premium keep going up, do you think there's a possibility that Malaysians will find they can't access to any form of healthcare insurance? Yeah, it's like it makes it just unaffordable for private.
I think that's the danger. I mean, that's the fear, right? Is that it'll become so expensive that it will disenfranchise a large part of the population who otherwise would try to avail themselves of private insurance, and it also would cause some insurers to exit the market, which is also very bad for both the insurer and for the policyholder. Mostly because what happens is if I'm in the business now, I'm taking in new customers into my pool all the time, and I'm qualifying them, and they're helping. The pool is growing, and they're helping to subsidize the cost of the whole pool, right?
Your risk pooling element.
But if I get out of the business, I'm going to close my pool. And if I close my pool, it's going to deteriorate. It's going to get older, and it's going to get less healthier by default. And so it's going to make the matter even worse.
But in those cases, can't those customers just shift to another insurance company?
The regulation would have to come in and allow that. But right now, it would be very difficult, especially for the unhealthy ones.
Okay.
Right.
Or somebody like me who's not eligible to buy a policy anymore because of age.
What is the age eligibility?
Usually it's 60 or sometimes 65 for a new insured.
Okay.
But coverage can go for as long as you want it to, up to age 100.
Which
Right.
means that there's incentive for you to stay on with your current provider? Or?
Sometimes it's not just incentive, sometimes it's a no choice.
Oh, okay. Okay.
That's very true. That's very true.
Therein lies, these are the larger kind of complexities that even policymakers may not have considered fully.
Yep.
Because of public pressure, I think Bank Negara responded. There's been less public pressure now, but you're kicking the can down the road.
Yep.
We're not quite sure what's
Yep.
going to happen in 3 years' time. But in the meantime, hopefully there can be some progress made on this basic voluntary health insurance product
Yep.
that can start the ball rolling in terms of having that larger health insurance discourse.
And
in
give more
Malaysia.
options to people who want to stay in the system.
Yep.
That's right.
Yep.
Yep.
Yeah.
Any final questions, Peter, for Mark on this issue?
Well, I don't have much questions, but I guess one thing that maybe I think it'd be good if you can share with us a little bit, because you were from the US, right?
Yeah.
I think US had this whole evolution from a very public healthcare to a very private one, and it became just unreasonable for
Yeah.
most people, and the
Yeah.
number one driver of bankruptcy there is healthcare costs. So maybe if you don't mind, just briefly share with us like how it evolved and can serve sort of like cautionary tale, right, for Malaysians to create sort of a discourse so that we won't ever step there.
Yeah. Well, I have to qualify to say first, I'm not an expert on the American system. I've been gone 31 years from the U.S. But there's one thing I observed that is happening in Malaysia that has happened in the U.S.
Right.
And that is basically corporates taking over the
hospitals, yes.
The hospitals. When I was born, not far from Ithaca, I was born in a city hospital, which was basically a nonprofit facility. Where I grew up in Ithaca, there was a county hospital. When I go back there now, it's all owned by
Private equity.
private hospital groups,
Okay.
which may be financed by private equity. I don't
Yep.
know, and that's happened all over the country. And that changes the dynamics a lot, you know. The not-for-profit, the local, they used to call them memorials, you know, or county hospitals or city hospitals. By and large, they're gone, and they're all owned by big conglomerates.
Yeah, we can see that happening in Malaysia.
And that is happening here, and it's not just here. I mean, it's happening in Singapore, where you see, some of the big hospital groups owned by either government related or private equity.
Yeah,
that's right.
And you see it happening in other countries as well. So, if I could say cautionary tale, that's the one that worries me the most. Is that the private system is completely run by those who put profit in front of everything else.
Yeah, so maybe as a concluding question, would it be possible, since the insurance companies also, I think, are pretty heavy hitters in the ecosystem?
Yep.
Would it be possible for you guys to say, look, if this particular hospital group, doesn't agree with the DRGs, or it doesn't, want to adhere to some of the cost control measures that we want to introduce into the ecosystem, so that premiums, the increases in premiums can be controlled? Is it possible for 2 or 3 of the big boys to come and say, look, I'm going to exclude you from my sort of like hospitals coverage?
Yeah. Well, that's happening to some degree now.
Okay.
Yeah. First of all, every licensed hospital is eligible, right? I mean, so it doesn't matter whether you're the high end of the tier or the low end of the range. But the thing that hospitals want and customers want also is the cashless card. We call it the cashless card.
Yeah, basically a letter of guarantee, right? Yeah.
They want that guarantee letter, right? And so that's sort of the leverage of last resort that insurers have, is that if for some reason it doesn't, the hospital, whether it be the costs or other factors don't suit the insurer, they're free to remove that hospital from their panel.
Right.
Now, that doesn't mean you can't go there, but that means you have to pay first
Sure.
and file a claim later.
That's right.
Which will discourage you from going there.
Yeah,
so-
big time, especially if the payment is a large.
Yeah,
amount.
especially if the payment is large. That's happening now.
Yeah.
But to a very small degree. To a very, very small degree. And
Yeah.
and it's a last resort.
Sure.
It's a last
Right.
resort.
Yeah. So I think maybe just to wrap up, Peter and Mark, I think thanks again, Mark, for your very
Yeah.
honest sharing and also for clarifying and explaining a lot of these very complicated concepts. The larger issue here is that the whole healthcare ecosystem is one comprising of different moving parts.
That's right.
You have the healthcare providers, meaning the hospitals. You have the doctors that are employed by them, the specialists. You have the different, vendors that supply to that system. And it's different for the private sector versus the public sector.
Yep.
And then I think there are also expectations on the part of the people for government to increase healthcare spending on the public sector. You hear about stories about how our doctors are, overworked and under a lot of pressure. So it's not as simple as just blaming one or two, parties or companies. It's the entire ecosystem.
That's right.
I'm glad that the stakeholders, including you guys at Liam, the private healthcare providers, are working together with Bank Negara, Ministry of
MOH,
Health,
yep.
and others in that ecosystem to try to achieve common objectives.
Yeah. It's a big task, but it's one of the seminal issues of our time right now.
Yeah.
It really has to be prioritized.
Yeah, and hopefully we've done our part in explaining a little bit more and trying to not to politicize this issue, to make it into simple sound bites, but give you a clearer picture of how the different moving parts work. In this particular case, the medical insurance ecosystem, the increase in claims, why premiums need to increase, and how we can control costs moving on. Thank you very much, Mark,
You're welcome.
Thank you very much, Mark.
welcome.
and
Thank
see
you.
you next week.